My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Welcome to the barbell economy. Hey, that's my takeaway when I look at the retailers that reported this earnings season. The high end is working, the low end is working, but everything in the middle is struggling. We saw this dynamic play out once again today, a session where the Dow gained 102 points, most of it at the end of the day. S&P advanced 0.41%, NASDAQ climbed 0.57%. Now, consider what's working in retail. Dollar Tree, Dollar General, Walmart, Costco, and Target, low end, as well as RH, the former Restoration Hardware, and Lululemon on the high end. Some people call it Lululemon, and they're wrong. Let's unpack these. Dollar General and Dollar Tree are bargain basement plays that cater to a vast cohort of Americans who are trying to make ends meet. Now, these companies are extraordinarily good at what they do. This morning, Oppenheimer published a very bullish piece on Dollar General, arguing that the chain has some of the best revenue growth momentum around. At a time when interest rates are slowing, meaning investors think the economy is getting weaker, well, guess what? This is a defensive holding. When retail's not so hot right now, Dollar Gen. Hey, Dollar Tree has got a similar story with an extra kicker. The acquisition of Family Dollar, which is finally starting to pay off. Oh, man. The company's remodeling its Family Dollar location. It's having a big impact on the numbers. This was no easy feat. I couldn't even bear to enter my nearby Family Dollar. I'd much rather go all the way out of the way to a more enticing Dollar Tree. I may not be the quintessential dollar store shopper, but I love these places. I go through sunglasses like there's no tomorrow. I lose them. I break them. I step on them. So I just buy 5 for $5. 5 classic-looking Ray-Ban knockoffs. Plus, Dollar Tree is the most nostalgic candy aisle on earth. Their stores are just plain fun. Special shout-out to the Cowtails family who sent me a big basket. I told them I bought a lot of Cowtails at Dollar Tree. But what matters to us is that they're low-end retailers. Both these stocks were targeted by short sellers. Sell. Because they source a lot of merchandise from China. So the tariffs are expected to be pretty painful.
The house of pain.
However, Dollar General and Dollar Tree are so fantastic at sourcing that they haven't had to sacrifice their margins. That's why both stocks are handily outperforming the average right now. Dollar Gen up 26% and nearly 26, and Dollar Tree up 20% for the year. Oh, that's terrific, right? The low end is in good shape. Same goes for the high end. Last night, RH, Restoration Hardware, and Lululemon, they gave us a taste of the luxury market, and they each reported masterful beat and raise quarters. Lululemon's forecasting same-store sales growth in the low double digits. That's amazing, and it's all thanks to the company's innovation and its fabulous execution. This conference call was full of praise for sweat and stink. They really care about hard work when it comes to workouts. Lulu's digital business now accounts for 35% of its sales. It's more than doubled versus last year. Meanwhile, while Wall Street's fretting about the trade war, Lulu's opening 10 to 15 new stores in China where they're absolutely killing it. In fact, Lululemon's so popular that some of its products seem to have no price resistance. People will pay just about anything for their ABC pants. Sure, management made reference to port congestion and the need for air freight, but it all comes out in the wash if you're able to raise prices. And Lulu is exactly the kind of company that could afford to pass those higher costs on to you, the consumer. Best of all, according to Matt Boss, terrific retail analyst at JP Morgan, Lulu has a major untapped opportunity to put up new locations all over the globe. Hey, listen, at a time when other retailers are retrenching, closing stores all over the place, Lulu can't put up enough stores. I like that. And then there is RH, the high-end home furnishings chain, formerly known as Restoration Hardware. I can't believe how strong their numbers were, hence the staggering 15.8% run of the stock today. It was only a quarter ago that RH growth seemed to be drying up, but you can never count out CEO Gary Friedman. The company earned $1.85 per share when the analysts were only looking for $1.53. That's a colossal beat. Wall Street expected RH to make $8.30 for the full year. Now Gary's saying he can do $8.76 to $9.27. More important, Gary, who we'll hear from tomorrow night in Mad Money. And Gary, good luck with the, I know you're a big Golden State Warriors fan. We had learned that he can't afford to be complacent because he was very worried about sourcing from China, and he understood maybe he had to change things up. When we pulled up with him at his Museum of Furniture, as I call it, in New York's Meatpacking District, a store that he said, get this, would do comfortably in excess of $100 million in sales, one store? He told us he had no choice but to continue doing a huge amount of business in China. Nobody else can really compete with the Chinese on price or quality, he explained. Well, that was then. This is now. On the latest call, Gary said that he's moving, quote, certain production and new product development out of China, plus exploring new partnership and expanding our own manufacturing facilities in the U.S.
Trump stock, Trump stock.
He doesn't want to be caught in the tariff crossfire. Oh, and it doesn't hurt that his customers don't seem to mind paying up. Listen to what he said about Trump's latest tariff hike. Quote, we have negotiated product costs and selectively raised prices to mitigate the increase of the increase from 10 to 25%. Yep. Those new tariffs are already embedded in RH's guidance, something most companies haven't done and has really killed a lot of stocks. How certain is Gary of the company's long-term trajectory? Here's some staggering figures. This man bought back 2.2 million shares at $115 a pop just this quarter alone. At this point, RH has now retired an astounding 60% of its float over the last few years at an average price of $61.44. It's like the company's gradually taking itself private. While other retailers bemoan that the weak second quarter, they didn't put up the numbers, Gary crowed about it because the stock market bounced back and his high-end business responds to stock prices. People are more likely to buy fancy furniture when they feel wealthier. The action in RH, just like Lululemon, tells you that the rich are doing just fine. Meanwhile, the companies on the low end, like Costco, I know you always see the Mercedes and the BMWs there, but it's still it's a cheaper place to shop. Walmart, it's got the pipes. It's not luxury looking. Walmart, Target, they're also in good shape. All three of these companies have the scale to dictate prices even to the Chinese. They all represent a bargain for the consumer. They're all working. I think they all go higher. Who's doing badly? The middle class of shoppers who buy things from the mall. These mall stores are falling by the wayside. Macy's has missed quarters and then made them, but no one seems to care because it's been written off as a hapless mall-based department store. We went to the flagship Herald Square store recently and marveled at the company's ingenuity, but it didn't matter. Nordstrom missed again. Hey, shocker. Even the usually reliable Kohl's got rocked, with stores that seem to be losing customers by the boatloads. The stock had been eviscerated, but I think Michelle Goss, the CEO, can turn things around. Some people think I'm too optimistic. That's the nature of this barbell economy. If your customers are wealthy, you can raise prices and do just fine. But everybody else is gravitating toward the low-end chains that offer better bargains. And that's crushing the vast middle class of the retail industry. It's the same reason that Amazon keeps putting up great numbers. The bottom line, when you look at what's working in retail and what isn't, well, it paints a pretty darn Dickensian picture. There's a market for high-end luxury goods and low-end mass-market merchandise. But right now, there's not much space in between. Let's go to Sip in New York. Sip.
Jim, booyah from Manhattan. How are you today?
Great to have a Manhattanite. Rarely do. Doing fine. How about you?
Rarely do. Hey, last time we spoke, you said you were going to buy me a drink at Bobby Vance if my Mazor got bought out my Medtronic. How about that?
Well, okay. Oh, yeah, I owe you one.
Okay. Listen, I want to talk to you about one of my favorite cloud companies in the world, one of my four horsemen. Alteryx, ticker AYX. Picked up the stock around $90 a couple weeks ago. Bought a little bit more on the dip last week at $80. Luckily, Google bought out an analytics company.
Right.
Even more luckily, Tableau was acquired by Salesforce.
Right.
Now, stock moved up almost 27 points from 80 to 107. Closed at 102 today. Do you think this stock has a lot more upside?
I do. Now, Alteryx is a lot like Zscaler, and it's like Zendesk. It's even like Okta. I mean, these are stocks that people don't really understand. You do. They do tend to just go higher and higher. I would take, you've got a trade going there. I would take some off, but that company's good. By the way, I want to warn people. If you go to www.alteryx.com, it follows you everywhere if you fill in the stuff like I did, because I had them on. I mean, it's like, holy cow. That thing follows me everywhere. So please, Alteryx, could you just stop following me? I did it to learn about the stock, not to be able to get the product. I mean, every time I pick up, it's like, did you Alteryx? Anthony and Maryland. Anthony.
Yeah, hi, Mr. Cramer. Thank you so much for dedicating your energy to helping small investors.
Oh, thank you, man. That is the game plan. That is the game plan.
Yeah.
We are not just help Stan Druckenmiller. We're not just here to help that fellow who bought the $38 million apartment in New York. Why do you do something like that? I mean, you know, I'm not asking you to live in a youth hostel, but all right, go ahead.
All right, I'm interested in your thoughts on Micron Technology, although it faces stiff competition among the chip makers.
Yeah.
Been following it for a long time. It's priced almost 20% below the book value, PE ratio of less than 3.5, well below the group sector, and earnings per share well above the.
Well, that's because they're not going to make the numbers,
traded.
and here's what's going to happen. Broadcom's down big tonight because they cut numbers. So Micron's going to probably hit, which is at 33, will probably hit 31 tomorrow, and you can buy all you want. And you know what? Maybe you should. Okay, let's go to Gregory in a state that's being decimated by job losses, Connecticut. Gregory.
I've had DuPont since 2000 at about $45 a share. You recently said that the Dow-DuPont merger was not a good idea. One, why? And two, should I sell my split-up shares of the new Dow?
Okay, I understand that it was because Dow itself has been very disappointing. But the reason why it's been disappointing is it looks like it's more oil-linked than I thought. Mr. Livers, who used to run it, always said it wasn't. That turned out to be wrong. DuPont, by the way, has a food division that I think could come up with a superior meatless burger. Stay tuned. All right, the stores catering to the super haves and the super have-nots are the winners. And that's a microcosm for the market and maybe even for the country. On Mad Money tonight, 2 analysts enter, but only 1 leaves. Don't miss an epic showdown over the fate of Capri Holdings. Plus, as I always say, there's a bull market somewhere, and tonight I'm eyeing one that's emerged in an unassuming space. I'll reveal. But first, the fake meat wars are heating up. I'm eyeing the major player now that Tyson Foods says it's getting into the mutant meat game. Although they would probably say, how about plant game? Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.